OK, let's start the clock then, Mark, and think about where we are in the markets. The fact that we see this buying of stocks and buying of bonds today, do we not read too much into that? As you said earlier, we're waiting for the inflation data out of the US, and we're kind of in limbo then until we get that.
I think that's absolutely right. And I think it's working off two different catalysts at the moment, though, of course, they feed into each other. So for bonds, this is really about the fact that we've seen an incredible move higher in yields over the last couple of weeks. And this is just about trimming some of those positions, pausing. And also, you've got to remember, for US CPI tomorrow, it's the first time in many, many months, perhaps the last year, that there's two-way risk into this US CPI print in terms of which way the data might surprise. We've talked a lot over the last few months about economists constantly underestimating inflation. We're getting to where that dynamic, they're slowly starting to catch up. They're finally catching up. Now we've got two-way risk into this number for the first time, and that's why people are nervous in the rates market. However, that easing of yields does support equities, but we must remember that even though the macro environment's been very, very tough for equities in the last few weeks, earnings season has been strong overall. So equities are partially going up because we are getting that earnings story overall. And it is important to emphasize that Hong Kong is leading strength. It doesn't show up in the GMM because it's not part of the G20, but that's really been the strength in Asia.
Right, yeah, up by 1.8% right now on the Hang Seng. You're right to point out the earnings story. We'll return to that in half an hour or so. Let me ask you about what's going on oil. We're a little more mixed on the commodities space today. We have, in recent sessions, though, seen new highs on the Bloomberg Commodity Index. Brent still around $90 a barrel. For a bear, though, you must be pleased that we haven't jumped much higher from the low 90s then, Mark.
That's absolutely right. It's the first day since I turned bearish last Thursday, not very long in that camp, that I'm feeling a little bit less nervous about it. Obviously, the market's only been going higher up until the last two sessions. I think there is suddenly starting to be a realization that, wait, hey, US shale supply is picking up, and we may be looking a little bit too limited if we just focus on the rig count. We have to remember that these rigs are getting much more efficient in extraction. So maybe the supply dynamic is turning a little bit more bearish for oil, just as we're getting a little bit more worried about the growth outlook as well because there's higher yields globally. So I'm not so much in the back foot as I was 2 days ago, but I'm still slightly on the back foot on that bearish view.
OK, sort of half on the back foot. Let me ask you about what's going on in credit markets. Mark, we talked about this yesterday. We've talked about this over recent sessions. Any sense that things are going to get disorderly in credit markets and spill over into other assets, or is concern our higher spreads are the case, are happening now for certain parts of the credit market, but does it remain pretty contained, do you think?
It does overall for the moment. Credit markets have just finally caught up to the changing environment on inflation and yields, and that's a worry for them. Yes, of course, the probability of a tail risk blow up and turn into a credit crisis has increased, but it's still very much a tail risk. I'm not particularly worried about credit just yet, but it's something we're going to need to keep an eye on later on in the year. In the short term, I think the repricing in credit has largely happened for now.
Yeah, interesting to phrase it like that it is a catch-up, and some of our colleagues pointing out, high-yield bonds are following treasuries this time, just that they didn't do that last time, and maybe that was more unusual than what we're seeing right now. Now, remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. MLIV GO, that is the function to use on your terminal.